Initial outlay. This table shows the incremental free cash flows for a typical project and includes all of the cash flows that you're likely to come across in this subject. We will begin most of the remaining modules in this topic by selecting one or more of the cash flows in this table and looking at it in more detail. In this module, we'll look at the initial outlay, which normally comprises the purchase of equipment and may include other initial development costs. Ordinarily, the purchase of equipment is classed as capital expenditure. If expenditure is classed as a capital item, it means that it will be depreciated over the life of the asset rather than being tax deductible when the cash flow occurs. Other costs that are incurred in getting a project up and running may be capital in nature or may be operating expenditure. If an expense is going to be capitalized, that means that it is included in the value of the asset which is going to be depreciated. Initial costs may be classed as operating expenditure rather than capital expenditure. If an expense will be written off, this means that it will be claimed as a tax deduction immediately. These costs occur at time period 0 at the beginning of the project, but if some initial expenditure is classed as operating expenditure and will be tax deductible, the soonest that that can occur is in year 1. A project to manufacture a new product will require the following cash flows in year 0. $1.2 million to purchase equipment, $0.2 million for transport and installation costs for the equipment, and $0.5 million for advertising to ensure that the new product has a viable market. What is the amount that will be depreciated over the life of the asset, and what is the amount that will be claimed as a tax deduction in year 1? It's normally the case that any costs that are incurred in getting some equipment installed and ready for use is included in the cost of the equipment, and therefore a total of $1.4 million will be depreciated over the life of the asset. Any expenditure incurred at the commencement of a project, which is typical of the expenses that are incurred from year to year, would normally be classed as operating expenditure, and therefore $500,000 will be the tax deductible amount at the beginning of the project.